Thank you everyone for joining today's AJBCC webinar, where we're focusing on the Japan-Australia Investment Report for 2022, Decarbonisation and Energy Security. I'm delighted to be moderating the discussion today. I'm Veronica Taylor from the Australian National University. Before we start formally, let me acknowledge the traditional custodians of the many lands upon which we're meeting. I'm speaking to you today from Ngunnawal and Ngambri country, and I want to pay my respects to elders past, present and emerging, and also to any First Nations colleagues who are joining us as part of today's webinar. If you have participated in previous webinars where we have featured the Japan-Australia Investment Report, you'll be familiar with the format. We'll hear first from the report's principal authors, and then we'll invite a couple of expert comments, and then we'll open up for Q&A and comments from the floor. Before we start, I'd like to direct your attention to the Q&A button at the bottom of your screen. We'll take questions from you, the audience, through that Q&A function. And I'd invite you to start populating the Q&A button with your questions and comments as early in the webinar as you wish. As soon as our speakers have finished, we will open the floor, and it would be great to have your questions lined up and to be able to get to as many of those as possible. I'd also like to note that we're recording today's webinar for those who are unable to join for the session on this date. So let me start first by welcoming and introducing from Herbert Smith Freehills. We'll hear first from Damien Roberts, who's a partner in Herbert Smith Freehills' Sydney office, having represented the firm for a decade in Tokyo, and someone who's well known to this audience as a really trusted advisor in energy and infrastructure projects, particularly in the Australia-Japan space. And we'll also be hearing from Ian Williams, who's a senior advisor to Herbert Smith Freehills, also vice president of the AJBCC, and a leading legal advisor and company director in the energy and energy transition space. So with that, Damien and Ian, I'd like to turn to you and ask you to take us through the highlights of this really important report.
Thanks, Veronica. I'm trusting everyone can hear me. Welcome to the release of our annual report on investment activity from Japan into Australia. This is our 6th report, as Veronica says, and this year's subtitle is Decarbonisation and Energy Security. As Veronica mentioned, my name is Damien, and after having spent 10 years working in Tokyo, I now support our Japanese clients from here in Sydney, together with many members of the HSF Japanese client practice across Australia and Japan. I'd like to start by thanking Richard Andrews and his colleagues at the AJBCC for hosting this release. And of course, Ian, I and the whole HSF team are hugely grateful to Nobutani-san and to Elizabeth for their generous contributions to today's webinar as well. In the course of preparing this year's report, the team reviewed and analysed the various M&A transactions and in particular partnerships that we saw in 2022, and have used that analysis to look more closely at the key drivers for the future of the bilateral relationship. As part of introducing the report, I want in particular to acknowledge the huge efforts of the primary author, Ian Williams, who'll share some of his invaluable insights shortly. As many people will know, Ian has been a stalwart of the Australia-Japan relationship, and in addition to the work here at the firm, he's contributed and continues to contribute much to that relationship through a variety of advisory and mentoring roles, not to mention, as Veronica said, his ongoing support for associations such as the AJBCC. And of course, it would be remiss of us not to include a huge public thank you to the many clients, associations, government bodies, and fellow advisors whose insights have helped shape our report. The report itself indicates that there have been, I guess, a considerable step change in the Japan-Australia relationship in the last 12 to 18 months. The geopolitical circumstances with which we are now all too familiar has brought the two countries closer together as trusted partners, and with even broader government support and business collaboration than before. In fact, I think there were more than a dozen publicised ministerial level meetings or calls between Australia and Japan in the year, and not to mention, of course, the various other state level visits. And as a consequence, we think the Chikihoyu analogy that we have adopted to represent the intimate friendship that now exists at various levels across the bilateral corridor is just right. The numbers also revealed Japanese M&A and investment activity in Australia was higher in 2021 than it had been in 2022 than it had been in 2021, and perhaps not so surprising given the constraints the pandemic placed on investments from Japan in particular, and possibly fueled by the recommencement of international travel between the two countries in October, which allowed face-to-face discussions and obviously physical asset due diligence. Activity in the year was seen across a broad range of sectors, including obviously energy, technology, financial services, real estate, and things like consumer infrastructure, construction, housing, and services. And it was in that context that partnerships also flourished. A total of 51 partnerships were announced in 2022, and approximately 3/4 of those related to decarbonisation or energy security, hence the title of the report. It was also pleasing to see new energy-related partnerships that were signed sort of between 2019 and 2021, progressing to proof of concept and implementation phases as the projects aim for commercialisation around 2030. Partnerships are a useful way for companies to collaboratively test and analyse new technologies without the usual medium to long-term liabilities associated with upfront investments. And in circumstances where there's still limited certainty around which projects and technologies will ultimately progress to wide-scale commercialisation. Of course, it's not all plain sailing, and we acknowledge that there were some headwinds experienced during the year. That includes decisions to raise royalties, the tabling of potential LNG export restrictions, mainly to support domestic gas needs, funding cuts to some of the technologies that have been touted as supporting the energy transition, etc. But ultimately, these challenges, they're not unique to Australia, and the public and the private sector from both countries will continue to work through them together very much on a Chikihoyu basis. Pleasingly, our research shows that the underlying drivers of Japanese investment into Australia all point to greater collaboration. Some drivers are familiar to us, common values in an increasingly uncertain global environment, democratic society with a commitment to the rule of law and human rights, an economy that has recovered relatively quickly from the impacts of COVID-19. And others are trends that continue to evolve. Corporate governance principles that have been adopted in Australia are becoming increasingly important in the Japanese market. Opportunities that are appearing for Japanese investors to gain efficiencies from and to grow unconsolidated markets here. And of course, ESG considerations becoming some fairly key elements of deal initiation. So these factors all point to a continuation of the positive story that speaks of an even stronger bilateral relationship and an even more complex geopolitical climate. So to help us dive into some of the details on what we've seen over the last year and into the start of this year, 2023, to break down the central focus on energy a little alongside some of the other key trends, and to perhaps even offer some predictions for the future. It is my pleasure to hand over to my colleague and good friend who needs no introduction to this audience, Ian Williams. Ian, over to you.
Thanks very much, Damien. We haven't got much time, and the report is about 12,500 words. So I'll focus on the main things. So obviously the theme today, decarbonisation and energy security. But to put it into some context, 75% of Japan's thermal coal imports are from Australia, and 43% of its LNG imports. Japan has some renewables, but it's difficult when you have typhoons to have expansive wind power and also offshore wind, typhoons with offshore wind, and also the continental shelf drops away. So it's quite limited, and obviously being 80% mountainous and doesn't quite have the same sunshine and surroundings as Australia. So energy from renewables, there'll be pumped hydro, there'll be others, is a challenge. So look, we've coined this term or picked up, adding to what many have written about is the sort of energy trilemma, which is this tension between the economics of it, customer affordability, the politics, secure and reliable energy supply, and the environment. So decarbonisation, climate change, sustainability, the ESG drivers that society is looking for. And we've added a fourth, which is the challenge of profitability. A number of Japanese companies, particularly the trading houses, have very profitable energy divisions, which they are now exiting. We talk in the report about the continued exit from thermal coal. So you're sort of selling today very profitable assets and replacing them with decarbonisation related investments, which may be profitable in the future. So from an investor relations perspective, that's applauded. Shareholders are probably less excited about that, given the likely reduction in profitability. So if you think of what are Japanese companies looking for in Australia, and we've sort of a long list here, but there's hydrogen, ammonia, methanol, obviously renewable energy projects, the wind, the solar, the pumped hydro. They're looking at electric energy storage solutions, smart grids, grid management, domestic batteries, carbon reduction technology. They're aggregating demand from smaller off-takers to sort of underpin some of the green energy projects, and then coming in as a kind of consortium joint venture, creating carbon credits, critical minerals, battery raw materials, and even repurposing and rehabilitating some of the coal mines to acquire carbon credits, and more recently, sustainable sort of aviation fuel, often from biofuels. So look, the kind of drivers in Japan are a little bit different from Australia. So Japan, because of this need for secure supply of energy, is looking at coal, LNG, renewables, nuclear, technology solutions such as CCS, but also hydrogen, but probably less pure than in Australia. The reality is blue hydrogen is going to be cheaper and easier to commercialize until green hydrogen, probably in the next sort of 7 to 10 years, can become sort of large scale, kind of competitive. So what you're seeing in these partnerships, which we coined the third paradigm of investment. First paradigm being your sort of classic joint venture and offtake arrangements, which we saw from the 1960s. The second paradigm being 100% or majority acquisitions of domestic Australian businesses, which sort of started in 2007 with Kirin and later Asahi, and we've seen Nippon Paint and Nippon Life and Daiichi Seimei, and to the extent 90% of the beer in Australia is either Kirin or Asahi, and about 50% of the life insurance is provided by either Nippon Life or Daiichi Life. So this partnership for new, this third paradigm is really interesting, because you've never seen such a collection of government agencies, state governments, technology companies, energy companies, infrastructure, shipping companies, all coming together to try and create, in a reasonably short space of time, enough of a market, not only to supply the energy needs in Australia, but to develop at scale the ability to export to Japan. And so if you, at the back end of the report in Schedule 4, you can see a map which Austrade has kindly provided, which sets out neatly of the major green or hydrogen projects, both green and blue, Japanese participation is significant in the key projects. So we've seen this sort of proliferation of partnerships. At some stage, some of them will start falling away, and as Damien kind of mentioned, you're going from joint study investigations to actually now, and the best example is the HESC project in Victoria, sort of a joint Australia-Japan government commercial entities getting together. That actually finished on 31 December, and now they're split into two projects with Kazushige Nobutani on one side of it, and then Sumitomo and J-Power on the other side. But the Green Energy Fund of Japan is going to fund $2.35 billion to get that project, using the lignite, which is going to be a cheap and reliable source, given there is no sort of international markets for brown coal. But you can see the kind of level of cooperation and partnership and the funds flowing from Japan in Australia to underpin this 30 to 40 year energy strategy that the Japanese government is now implementing. So great opportunities for Australia in a kind of unique way, but also so important for us, because if we're going to, hopefully fossil fuels by 2050 are much less important. But if you think of the export revenue from thermal coal and LNG, two of our top three exports, and the royalties that are generated for state governments, particularly Western Australia and Queensland, we need to replace these. And unlike with fossil fuels, we have the natural advantage of the fuels are actually here in Australia, and it is an advantage for blue hydrogen. But for green hydrogen, there's a number of places that in the world, and President Biden's new IRA Act is going to make the United States very, very competitive. So we're kind of in a, Australia and Japan are coming closer and closer, as Damien said, driven by this kind of geopolitical sort of changes around us. But at the same time, we're in a global competition to be competitive in this transition to new energy. So probably stop there, just chewing through time. The critical minerals and battery raw materials, that's going to be, we've seen Sojitz and JOGMEC invest heavily again in the Linus project. Mitsui is starting to recycle some of the monies from their fossil fuel sales or their thermal coal sales into it. The difficulty is there's a lot of competition for that, particularly Korean companies are very much trying to dominate the world kind of battery and battery storage markets. It's essential for stability. The critical minerals are found and processed in Australia for export to our key partners. I'll stop there and say, well, look, that's the kind of main driver of the report. But I just wanted to mention, we identified 18 interesting, well, we thought were 18 interesting trends. There's probably, even within a decarbonisation, it's probably more than one. It's probably 3 or 4 trends. But the other things that were kind of new this year was we're surprised at how much technology, Australia is not a natural partner for Japan in technology, but it's really growing. The success of the various unicorns has meant Australia is now a place that people do think about as having the ability for startups to then grow. The technology, the software, digital transformation, innovation, venture capital is all very active here. And Australia and Japan are working hard to kind of foster that. There were 12 of the 50 transactions were actually technology related, which, is kind of not what you'd naturally think. Some of them are, obviously Fujitsu has built a very successful business here, and they're continuing to have these bolt-on acquisitions. But you're seeing things like Komatsu then expanding the mining related, they're looking for efficiencies as well, which is all sort of being underpinning decarbonisation. Mining is incredibly diesel fuel intensive. How can you reduce that? Well, you need AI, you need improved software, improved efficiencies. The other thing that flows out of that is this interesting collaboration between Australian universities and Japanese corporates. And the universities are very active in visiting Japan. They're members of the Australia-Japan Business Council. In Japan, R&D is mainly done by corporations, but in Australia, it's actually CSIRO and the universities doing that doing that basic research, and then working together as sort of co-partnering to commercialize that. The other two I wanted to mention was financing. It's kind of, we could almost write a story on its own of as the European banks left Australia after the Lehman shock, global financial crisis in 2008, is replaced by the three Japanese mega banks. And to the extent this year that SMBC, MUFG and Mizuho, by some of the measures, are Australia's three leading project financiers. And you think of all the infrastructure, the hard infrastructure, the economic infrastructure, the social infrastructure like the new hospital PPPs, together with renewables and the new energy, hydrogen, ammonia, methanol projects. We're so lucky to have these three banks, plus JBIG support, plus JOGMEG, plus Norden Chukin, all actively supporting the development, because there just isn't a pool of available funds without that. So it's unfortunately not spoken about enough, but it really deserves more praise. And the third one is, lo and behold, 30 years after the bubble burst, commercial real estate is again hot. And there's a number of companies that have made their first acquisitions, a number of others that we couldn't mention in the report that have been doing due diligence. We expect quite a bit of competition, which is kind of a little counterintuitive, given we're all sort of got used to working from home. Not many people want to go to the office 5 days a week. The kind of thinking in Australia is maybe that market is shrinking. But notwithstanding that, you can see in the report there's half a dozen new acquisitions, and from interesting people, not just your Mitsubishi estates. You're getting the subsidiaries of railway companies, gas companies, power companies, who are all looking to kind of diversify their portfolio. So Veronica, I think I've had my allotted 12 minutes, so thank you.
Thanks so much. You've opened up so many interesting issues there, and we do want to come back to you. But first, let's take the opportunity to hear some comments from the Japan side. We're really delighted to welcome back the President of JETRO, Nobutani-san. Thank you for joining us. And Nobutani-san, we'd invite you now to comment on the report.
Well, thank you, Veronica. Thank you, Ian and Damien, for a presentation of your great report. My name is Kazushige Nobutani, the President of JETRO. Well, let me make some comments on the report and presentation. M&A by Japanese companies in global market, if we look at that, total numbers of M&A has increased steadily in last 10 years. In 2021 and the first half of 2022, they have not been as large as before, but still they continue investing more than 10 years ago. Focus area seems to be digital, energy, and healthcare. If we look at Australia market, Japan came back to the second largest investor stock, ahead of the United Kingdom in 2020. During the period of COVID-19 in 2021 and 2022, Japan has been the largest investor to Australia, while other main investors such as the United States, Germany, or even China showed negative numbers of FDIs. I think FDI from Japan to Australia will continue. Both sides have sufficient reasons to do so. So let me go through the reasons. On Australian side, you provide solid ground for Japanese investors to put their money there. Our Ministry of Foreign Affairs conducted a survey in Australia in January 2022. Japan was selected as the third most important partner in the future after the United States and the United Kingdom. We also noticed that according to an opinion poll by private think tank Lowy Institute in 2022, it showed Japan was selected as the best friend for Australia in Asia. They are a good reason for Japanese investors if you compare the situation in Russia. On Japan side, our investor look Australia as traditional and indispensable energy partner. In addition to that, some of investment focus on consumer market, which has been growing robustly and steadily thanks to increase of income and population. According to JETRO survey last year, the reason to invest in Australia was market growth, followed by stable environment, politics and society, and living standards and quality of life. Even though, as the report picked up, we face some headwinds or difficulty of sudden change in energy policies. We fully respect democratic decision of federal and state government. We believe timely information sharing and candid dialogue in transparent manner are important. We should deal with each case one by one, and JETRO is happy to share those responsibilities with Austrade and other related organizations. Finally, both sides have reasons to continue economic relationship. Energy and decarbonization are common challenge to lead the Indo-Pacific region and the rest of the world. As long as JETRO counts, around 40 hydrogen projects have participated by Japanese companies. In the report, it shows some of new energy partnerships are now progressing toward proof of concept and pilot plant development. That is great news for us too. Also, as Ian pointed out, startups are another common challenge to materialize the better future. I'm happy to learn in the report that increasing number of large Japanese companies acquiring Australian startups. JETRO has a matchmaking program between large Japanese corporations and foreign startups. This program is we call J-Bridge. And we have organized more than 600 matching events last year, among which around 40 events were held with Australian startups. JETRO also welcomes Australian startups coming to Japan. As Ian said, we notice there are strong movement of technology in Australia that we are always happy to guide them to any industry, universities, laboratories, and any place they want to go. So this is my comment on the report. Thank you.
Thanks, Nobutani-san, for those really insightful comments. Before we go to Q&A, I'd like to invite people to post some more questions under the Q&A button. And also, before we open up the floor, I'd like to turn now and invite Elizabeth Cox to comment on the report and join the conversation. Elizabeth is well known to this audience. She's the General Manager, Northeast Asia for Austrade, and she joined Austrade after a long and distinguished career at Macquarie Group, and again is someone with considerable experience in Japan and someone who's a very, very close watcher of trends. Elizabeth, to you.
Thank you, Veronica, and thank you, Ian and Damien and Nobutani-san, for the great lead-in. Firstly, I just want to congratulate Ian and the team again for a fantastic report. You've really nailed it again this year. Another exceptional piece of analysis, and I do recommend everyone, particularly the key trends page, which is page 12, which is a bit of a blueprint. When I map this against where Austrade's focusing its efforts and resources in the region, certainly these trends do cover that pretty well. So I do recommend that you have a good look at that when you have time as well. So we don't have long, and we'd love to spend a bit of time on Q&A. So I'm just going to touch on a few areas very briefly on how the bilateral relationship's going from our point of view here at Austrade as the Australian Trade and Investment Commission here in Japan, and how we're seeing investment trends. So I'll start with bilateral ties. The report picks up very clearly on the return to face-to-face travel. I remember this time last year, that was a real key theme of our discussion was the roadblock, I guess, of the inability for very senior Japanese business people to visit Australia, to kick the tires, so to speak, on potential investments and existing investments that are looking to increase their equity in. That problem has gone away. Certainly, if you view the visit activity both ways, from Japan to Australia, from Australia to Japan, we're seeing a real uptick. And my team can tell you firsthand that we are exceptionally busy, not just with Japanese visits to Australia, but very pleasingly, a real pickup in Australian businesses looking to come to Japan. And we saw that with the AJBCC conference in October last year, the really strong participation of Australian companies. That's continuing 6 months later, which is a great trend to see as well. So that's on the business side. On the political side, it's the same story. There's been a really fantastic tempo and cadence of political visits. I think in the report we mentioned 13. That includes 4 by our Prime Minister, who, as you know, has only been in the office since May last year. So that's 4 visits. We of course had Prime Minister Kishida visiting Australia last October, and that cadence is very, very. It's deliberate. So Japan is an incredibly important partner for Australia. If you look at the media, you sometimes see, large business delegations going to India and elsewhere in the region, but that cadence and tempo of visits is intentional and really symbolic of how important this relationship is to both countries. As Nobutani-san mentioned, we're really strategically aligned like never before. There's no 2 countries in the Indo-Pacific region who've experienced the uptick from a strategic point of view that Australia and Japan have in terms of our alignment. And it's a brand new, not a new facet, but a growing facet, I guess, of the bilateral relationship on the business side as well. That's why I think the term Chiki Hoyu, I'm thinking of putting a poster with the kanji characters behind me, because I think it really exemplifies the intimate friendship that we both enjoy, and it's just continued to grow. Here at the Embassy, you may have seen in the AFR, there's been an article published today that we had the Australia Day in Spring, which is our annual cherry blossom event. I know a number of you have participated in that before. Firstly, it was a huge success despite not so great weather. We had hundreds of people in the garden, and it's been noted by previous speakers, it wasn't just the traditional trading house companies anymore. Looking around the garden, there were companies working in space, there were venture capitalists, there were technology companies, as I think was also mirrored by the experience of AJBCC this year at the conference. The spread of companies we're seeing come forward as leaders in the Australia-Japan relationship is growing as well, which is a great trend to see. So the step change, I think really aligns with what we're seeing here in government. Second point on investment trends, these have been covered well by the previous speakers, but the feeling is that we're a preferred investment destination. The fundamentals of Australia, as can be seen in today's Why Australia benchmark report, which has been released and will be shortly on my LinkedIn for those who are interested. The fundamentals of Australia are very much there, including strong population growth, which is something that's coming up in a lot of meetings I'm having at the moment. The real disparity, in the metrics of what Australia is seeing in terms of population growth versus the depopulation here in Japan. So as Ian noted, that's one of the underlying factors for the growth in real estate companies being interested in investing in Australia this year. Of course, it goes without saying, security is a #1 issue. Those who've heard me speak before will know I like to talk about the 3 S's: energy security, traditional security, and food security. I've recently added a 4th S, which is economic security. I won't go into too much detail right now, but I think it's just fair to say that this underlines every conversation we have, whether it be a cotton farmer or a major energy company. Everyone wants to speak about some aspect of security, both in the region and of supply and supply chains as well. So all the clean energy related investments you'll see, and I can recommend to you, there's a great map at the back of the report as well showing some of the investments, which Nobutani-san also mentioned, the approximately 40 projects around Australia that Japan is involved in hydrogen across various production types, various colours. It's really great to see the diversification and spread of those projects as well. I also wanted to note circular economy, which got a bit of bigger Guernsey this year, to use a rugby term, Ian. Got a bit of a run this year, which I think was something we talked about last year as being a really emerging trend that we're seeing, because decarbonisation, of course, is at the forefront of the minds of every Japanese corporate we speak to. But this is not limited to energy projects by any means. This involves things like circular economy, sustainable aviation fuels, sustainable forestry, and as I mentioned, smart cities and real estate really coming to the fore as an investment trend as well. I also note the interest in defence and space. We've seen, of course, Japan announce it's going to be spending up to 2% of its budget annually on defence by 2027. We're seeing already seeing proof positive of this happening. We had a great delegation from Australia visit Japan in March, or 2 weeks ago now, to attend Japan's biggest defence trade show, which is DSEI. Over 40 Australian companies attending in person, with hundreds of business matching meetings run by Austrade, which just, I think, underscores again how important the defence business aspect is becoming in the relationship as well. I'll stop, as I always do, by giving a quick plug for my team. We are here, as I mentioned, to help you with everything on page 12. So please feel free to contact us if you have any questions on those areas. And also, my team will be running a major initiative this August, which will be a decarbonisation summit in Sydney, which AJBCC is kindly supporting us on. So please watch out for more information on that. I'll leave my remarks here, but happy to take questions in the Q&A. Thanks, Veronica.
Thanks so much, Elizabeth. That sounds great. I'd like to invite all of our speakers back to join us at this virtual table. We've now got ample time for conversation and to respond to questions. So we'll start with the first question that has come in from Prudence Gordon, asking to you, Ian, first. What are your views on the Australian government's emissions safeguard legislation and its possible impact on Japanese investment in Australia's gas and coal projects?
Yeah, it's interesting. I'm chair of the Audit and Risk Committee at a pure play thermal coal company, so it's we're on the list. So I don't think it'll affect anything too much. I mean, in a way, it's quite good in that it'll create a price for carbon. So business likes certainty, even if the certainty is unpleasant, but you're better off knowing there's I think there's a proposed cap of about $75. But once it's clear, business will respond to that. And whether it's technology solutions, there may be an increased cost to buy carbon credits, if that's the way in which to. So I think it accelerates the sort of embodiment of decarbonisation into all those business plans of those businesses. I mean, the price of energy is very high at the moment. The companies who are involved with the export of energy have done extremely well. So in a sense, the timing is good to fund those solutions, and it is legislated now. So I don't think that there's going to be new investment in fossil fuels, so much LNG perhaps, but in the all, it's creating an orderly market. And it's part of, I think, those building blocks towards, the energy transition. That.
Thanks so much. Could I also invite Nobutani-san and Elizabeth to join us as well by turning on your videos in case there are questions or in case we'd like to solicit your expert advice as well. The next question is really about the second part of the report dealing with the level of investment in technology. And the question from Pablo Riveros is, how can Japanese startups accelerate collaboration and knowledge exchange with Australian partners, or even call forward more investment from Australian partners? Any thoughts on that? We might go first to Ian, and then I might invite Elizabeth to comment as well.
Yeah, Elizabeth might be more qualified. Look, I guess we've tended to focus on more Japanese investment in Australian startups, so sort of the opposite but there's no reason why the same sort of principles wouldn't apply. And you're getting things like the recent collaboration arrangement between Mitsubishi UFG and Artesian Investments, who seem to be this kind of leading facilitator of VC and startups. But I'll leave it at that.
Elizabeth, would you like to add anything?
Oh, I think Ian's covered it really well, but just to say again, that is exactly the intent of the seminar that we're running in August in Sydney, is to allow this real on the ground business matching for companies to meet each other, to talk about what's needed as we go forward together into decarbonisation journey. So please watch this space for more information. Certainly a trend we're seeing on our side as well, the technology-led transition that other speakers have already spoken about. So that kind of activity is something we're looking to do more of. And so please keep in touch with us on that as well.
Please, Nobutani-san, go ahead.
Well, thank you, Veronica. As for Japanese startups for investment potential for Australian companies, I mean, JETRO organize several events for Japanese startups go abroad, and JETRO Sydney office is always happy to find Japanese startups for Australian investors. So if you contact our colleagues in Sydney, he will find he can list up the name of Japanese companies, and then he can connect with them. Thank you.
Terrific. That's really helpful. Thank you.
Veronica, I might just add too.
Damien,
I think
please.
also similar work's being done by the AZCCJ in Japan in terms of matchmaking and particularly focusing on startups. But it also got me wondering, I was certainly looking at the developments over the last few years, the partnerships we've had in Australia, particularly with the education sort of providers, the universities, the think tanks, whether that model couldn't work just as well in reverse, using some of the Australians sort of reaching out to similar organisations in Japan to look at opportunities to collaborate in that space rather than so necessarily just in Australia. So certainly for a few years we had partnerships build up. They're moving into sort of implementation phases now. I don't see why that couldn't work the other way around as well.
Can I add one more point? Sorry, Veronica.
The
Innovation Dojo. Damien raised a really good point about the ANZCCJ. Innovation Dojo, based in Osaka, is another great avenue, great channel for companies looking to collaborate here. So recommend them to you. Run by Josh Flannery out of Osaka.
There's a follow-on question about startups from Toshiseki asking, it's usual for Japanese VC or CVC to prefer to invest in a foreign startup jointly with a local foreign VC provider. So are Australian venture capital entities or partnerships open to that kind of joint investment? Is there space to collaborate actually in venture capital?
I could make an initial comment. What you're seeing too, this kind of the joint venture style or making taking a shareholding, but you're also seeing quite a lot of Series A, Series B fundraising, which Japanese venture capital and pension funds last year. It was Daiwa House Employee Pension Fund participated. We mentioned in the report some stuff with SoftBank, with Go1. So what's interesting is capital is finding its way to interesting or companies with interesting ideas, and a lot of them can go global instantly rather than sort of a local technology.
Thanks.
I'd agree. And I mentioned before the event that we're seeing at this, even looking yesterday at our function and the last few engagements we've been having, a real proliferation of venture capital organisations looking to invest in Japan. Australian VCs tend to have a more flexible range of arrangements that they can work on and with. So they may look to come in more solo than perhaps partnering. Although we always tell people partnering is always recommended in Japan, at least in the initial stages, while you get a feel for the market.
Thanks so much. A question from Darren Gould really goes back to, I think, the point that you raised, Elizabeth, about circular economy. And Darren's asking, is there any appetite for Japanese companies to invest in recycling or material capture and energy from waste sectors in Australia? We haven't spoken about that sector specifically, but is that something that looks ripe for investment, and is there actual interest?
It's a great question. Thank you, Darren. So decarbonisation generally, as I mentioned, is a real theme. So it doesn't just have to be on energy projects specifically, but certainly looking across the circular economy spectrum, we're seeing a lot of interest. So things like plastics, tyres, for example, that's examples of projects we've heard of that Japanese companies are very interested in taking forward. So there definitely is interest.
Yeah, what I might say is, I mean, Japanese companies have been looking for a long time, and we mentioned in the report, Hitachi's Osen, it's a European subsidiary. They're already doing the East Rockingham waste to energy facility. Itochu's partnering with Veolia on one in New South Wales. Mitsui has a large investment with Sims Metal Management, which in Australia has a concept of urban mining. So getting all those valuable metals from recycling computers and other electrical goods that proliferate our society.
That's really interesting. There's a related question from Monica Richter about Australian green iron. So how's Japan thinking about decarbonising its steel sector, and what role will Australian green iron play? Is there interest in investment or value add for the Australian iron ore export sector?
Or maybe I could make an initial comment.
And we might ask Nobutani-san as well.
Yeah, having worked for Kobe Steel at one time in my career, look, there's no substitute for coking coal. So if you talk to the steel companies, so look, green steel is probably still not much beyond kind of a concept. So the energy to make the steel, sure, that can be green, but there doesn't seem to be any particular substitute for hard coking coal. Fortunately, Australia has a lot of, and iron ore, but the inputs, the energy inputs, you may be able to classify that as being green if it's produced from renewables. And look, the other thing is you may, for particular products, customers may be willing to pay a premium because of the way in which they want to for something that is produced from renewable energy. But if you're talking about mainstream steel production, I think it's the technology is a little bit away.
Well, from my side, I mean, Japanese steel companies have started their research and development of green iron, but using hydrogen instead of coal. But it is only experimental phase at this moment. They say that technology can be available in 2030, but it doesn't substitute all of the coal at that moment. So, well, they are heading to green iron, definitely, but it takes a long time.
That's a really interesting observation, and it does also underscore the observation that Ian was making earlier about the very visible uptick in jointly ventured research and development, particularly in the university and research institute sector. So for those, far horizon projects, some of the investment absolutely needs to be in the fundamental and applied research that will get us to those solutions. So it's really great to see the degree to which those partnerships increase. You mentioned Headwinds. And at this stage in the conversation, we've largely been talking about positive trends, but I wanted to ask a little bit more about how strong are those headwinds, and what are the really salient settings in Australia, either regulatory or political, that Japanese investors are worried about? Could I go to you first, Ian, and then to Nobutani-san?
Yeah. Look, I mentioned it before, business likes certainty. So no one likes uncertainty, and uncertainty means higher risk, which means you need a higher return so the sudden changes at both state and federal without a lot of consultation has slightly concern people that this is a trend, and they say, well, today it's LNG or coal, but what about in the future? Would it apply to critical minerals or hydrogen exports? So is it longer term? I don't think it's probably an understanding that it's responding to unusual circumstances where domestic energy prices have been incredibly high, and it's for a domestic audience, but it's something we need to be mindful of.
Thanks for that. Nobutani-san, your perspective.
Well, as Ian said, we are in a difficult times, and I mean, not only in Australia, but also any other place in the world, we Japanese investor face the same kind of problem. So, and as I said, we respect a democratic decision of the federal and state government. It is important for us to learn the related information in timely manner, and we would like to have candid dialogue if needed in transparent manner. So in that sense, well, we have some, our companies have some concern, but we should, we can be calm to deal with this case one by one.
And that candid exchange of views in a calm manner would seem to also be a component in the deep and mutually respectful type of friendship that
Exactly.
Ian and Damien have pointed to in the report.
We have sufficient ground for that kind of conversation.
Liz, I wanted to ask you, from where you sit in Tokyo, what your perception is on headwinds. Are there things that you would identify that need a little more attention? Is there any danger that we're complacent about what seems to be, you know, a fairly historic moment in the relationship where we're both deepening and broadening?
It's a great question. Thanks, Veronica. I think the previous speakers have really covered off on the energy security part. So I might talk about other headwinds that come up when we speak to Japanese investors. Cost of living, of course, you know, Australia is a very expensive place to hire people. Labour shortage is an issue that comes up from time to time. Of course, the government is taking steps to address this through various visa programs. And as I mentioned in my previous remarks, Japan's really been heartened by the speed at which immigration is picking up in Australia again. That's something that's come up in conversations. The high cost of the weak yen, I guess, is another one that comes up very, very regularly, making Australia a more expensive place to do business, but also to travel. And that's noted in the report that we're still seeing that kind of that trickling effect of tourism coming back from Japan. Certainly cannot say the same the other way. There are plenty of Australians as I walk around Tokyo, but I think that is something that, you know, the cost of travel and the cost of doing business in Australia is something that we do hear about. But on the earlier point on energy, I just wanted to point out that this is exactly the point of something like Chikihoyu, the fact that Japan and Australia have this deep alignment, the fact that we can speak in a clear and respectful way when we have differences, and the fact, of course, that the Japanese companies understand Australia. Having worked in my formative years with Ian and Damien at Mitsui many years ago, many years ago for me now, and also dealing with Japanese companies every day, they understand how Australia works. They've been there for 50, 60 years in some cases. So we're already coming with a very on both sides, a very sophisticated understanding of how things work in both markets. So we'll continue that clear and respectful dialogue that Nobutani-san referred to earlier.
Thanks so much. Turning to our audience, if you have further questions or comments that you'd like to put into the Q&A box, please do. We have a couple of moments left to deal with these. In the meantime, while you're thinking about those, I'd like to turn to Ian and just invite further comment.
Yeah, look, I guess if we can cover some of the other things. LNG is regarded as absolutely core as part of the energy transition. So I know politically the Greens Party would like to, well, their stated policy is no new mines, no more LNG projects. And obviously politics is difficult, but it's clear that that remains absolutely essential as part of a sort of an equitable energy transition. Iron ore is another one. I mean, the amount of money generated out of Western Australia is quite incredible for those Mitsui Marubeni and Itochu. It's interesting, things like space cooperation. As you say, who would have thought, you know, Australia would be, but actually there's a long history in Australia of initiatives there. And, you know, this is the way one of the clients or one of the people we interviewed said, Australia and Japan have always had this great relationship, but the world around us has changed so much, the geopolitical, and it's just bringing us even closer together. And I thought that was a nice way. So things like, you know, we're spending more on defence, Japan's spending more on defence. We've actually got, you know, I think Liz has been doing defence delegations to Australia. Who would have thought of that even, you know, 3 years ago? So it's just all these new kind of areas. What's also been interesting is you look at, you know, we mentioned Frucor, Suntory, Asahi Group, Nippon Paper. They bought a business in Australia and now they're building that business out, some through bolt-on acquisition, some through building whole new facilities with capital that may not have been available under the previous owners. So it's you've kind of got your M&A, you've got your partnerships, but there's sort of this whole new category, and whether it's mining expansions or, you know, industrial expansions. So, you know, there's great desire in Australia to rebuild the industrial base. It's actually Japan's playing an important role in that with the, you know, the quality of the facilities, you know, something Japan is well known for.
Ian, that's a really great segue into a question from Brett McCarthy, which references Elizabeth's comments about opportunities for partnering in the defence sector as the Japan-Australia security relationship strengthens. So what would those opportunities look like? What kinds of products or services would Japanese defence providers be looking for from Australia? What partnership opportunities or opportunities to co-develop technology or do R&D together might there be? Elizabeth raised it, so I might go to you, Elizabeth.
Yeah, absolutely.
Other people are just pondering that.
No, thank you. It's a great question. It actually brings together a few great, really interesting themes, defence, but also depopulation or demographics, because what Japan's really looking for in a nutshell, and I could elaborate on this for another hour, but I'll just keep it to a nutshell, anything that's unmanned, so AI, unmanned systems, so cyber solutions, that kind of niche product that Australia is actually quite strong in, is what they're looking for. So if you looked at our booth, there wasn't a lot of hardware on the booth. You know, there was small computer screens and sort of small simulations rather than large scale hardware. But a lot of companies looking to partner on those solutions, because that's where the trust aspect comes in as well. The fact that they trust Australia to develop these solutions with Japan. So that's where we're seeing the opportunity at this stage, going both ways.
Liz, I completely agree with that. We're doing work internally at this end too. It's not about the hardware; it's more about the soft stuff. Cybersecurity, as you say, AI is what can we learn from that? How can we help sort of protect the online borders as much as the physical ones? So that's actually becoming a really strong theme. And as you say, and as Ian mentioned earlier, a lot of the investment now looking at some of the opportunities here is around technology per se, and that's definitely within the sphere of what we think and what we're seeing Japan is looking for, a great collaboration opportunity.
We haven't mentioned it specifically today, but that also shades into Australia's relative strength in fintech and regtech, so technologies for systems integrity and for managing and oversighting systems is both, you know, well advanced in its development here, but also in its uptake and testing. So that's an area of collaboration and opportunity with Japan. Nobutani-san, I see you nodding. I'd like to just give you an opportunity to say a word before we finish.
Well, I mean, as you said, technology is a emerging sector between two countries. Well, we had good conversation in AJBCC meetings so far, and the universities came to Japan last autumn. So let's work on it. Thank you for the comment.
That's a great sentiment to close with. Let's continue to work on it. So it's been a largely good news report with some really terrific trends identified by Ian and Damien, but also some more work to do as well. So thank you all for joining us for this webinar. If you've had an opportunity to read the report, you know how valuable it is. If you haven't yet had a look at it, it is available in both Japanese and English from the HSF website and also from the AJBCC website. And I really encourage you to dive into it and really look at the terrific examples that Ian and Damien have brought forward. Thank you for your good questions and comments today, and thank you again to our two presenters and to our two expert commentators.